Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. As always, breaking down everything that went on in the overall market. We'll talk about the market trend, market environment, distribution days, sectors, my specialized sub industry groups. Go over any stocks that anybody has, and get everybody ready to trade for next week. So, without further ado, time for the Rapid Review. Hey, what's going on, Fen? Like I said, guys, chat's open. So, questions, comments, excuse me. If you have any stocks you want to look at, just drop it there. As you guys know, educational informational purposes only. This is not financial investment or trading advice. What's going on, Chad? All right. So, getting started. Oops, I did not change that. All right. Disregard the exposure levels, back down to 40 to 60% in terms of exposure levels. I'll talk a little bit about why that is. A lot of that has to do with how a lot of the prior leaders are acting and just the overall way a lot of stocks are acting. Market stance still sideways. Webby trend still showing choppy on both. My 50-day trend still showing sideways on both. S&P is just 2.14% off of the all-time high, where the Nasdaq is 6.14% off the all-time high. It's been 75 days since we got that first rally day. And then there you have your follow-through days for those who don't know about that. Index performance, looking at the week, the leader for the week was the Russell 2000, down, a leader, but down, down 0.52%, Dow down 0.93%. Then we have the S&P down 1.55%, NASDAQ down 2.90%. Everybody closing in the bottom half of the week, but looking at the S&P and looking at the NASDAQ, 17.6% closing range on the S&P and 25.3% closing range on the NASDAQ for the week. So poor closing ranges, hence the red. And yeah, not a great week for the market. S&P up 7.62% for the year, NASDAQ up 8.17% for the year, Dow up 7.05% for the year, and the Russell up 16.88% for the year, leading everything. In terms of the moving averages, so one of the things, if you notice these thin lines underneath any of these moving averages, that means that we broke below those levels or below those moving averages compared to last week's close. So when we're looking at the S&P, we broke below the 10, the 21, and the 50. NASDAQ also broke below the 10, the 21, and the 50. The Dow broke below the 10, the 21, and the Russell broke below the 21, was already below the 10-day simple moving average. So very, very negative sign to see us below the 50s. But really specifically, the one that really makes kind of stands out to me a little bigger is the S&P, because we have been holding above those moving averages. So to see us finally kind of break below, though not by a lot, not something that you want to see. We'll see if that can kind of hold. But the Nasdaq has really been just chopping around the 10 to 21 and the 50 for a while now. So no surprise there. All right, let's jump over and take a look at what's going on with these charts. As always, let's start off on the NASDAQ. Liz, don't forget any of these but watching a list of stocks. Feel free to poo-poo anything I post. Yep, no problem. Hold on, about to sneeze. Maybe not. Thought I was going to sneeze. All right. Let's look at the NASDAQ. We're on the daily. So big break on Friday. You do not, this was what we were kind of talking about when we're looking at just kind of the overall trend of what's going on. So we saw the big break here. I just got to blow my nose, sorry. Excuse me. All right. So we had the huge big uptrend. We had a real quick rapid break. We talked about this around this time that was likely going to create some chop, and it did. But what we started to see was this kind of volatility contraction. Mark, many of you probably would call it a VCP. But what we're really seeing is these swing highs and these swing lows starting to get tighter, right? So from here to here, from here to here, from here to here, just like this. And then we started to trade within this really nice tight range, which was really, really constructive. But one of the things that I kind of talked about during the week is though it is constructive, the way that we break is going to tell us more. It's not necessarily saying, oh, this is setting up to break higher. It's just saying this is getting very, very tight. And where we break from here is going to kind of push us in a direction. And that direction on Friday was downward. The big thing, too, that you could see. So we have the low right here on July 8th. That kind of looked like it was like almost maybe like a shakeout and then a rebound. So I put a line across there because there was an area I was watching. And if you look, we just broke below that level. Uh, so our expectation was we were going to hold in this range and then just kind of sit back and wait to see which way we broke. And we basically broke to the downside. So really, really negative sign to see that there. The volume was lighter, so you can kind of keep that in mind. But and we did shake pretty like we gapped through that level. We had some kind of lower action. If you even look at we'll just look at the 15-minute, right? We gapped, we pushed lower, and then quickly rebounded off of those levels. And you can even see this is that kind of line. And then we kind of chopped around and basically closed at that low. So keep that in mind. We'll see if this is because they're so tight. Will the buyers continue to step in next week and pull us back up? And is this like a shakeout? Or if we really do hold below that, then that's going to be even more of a negative sign. So like kind of like the first strike against the Nasdaq right now in terms of the technical action, and we'll see if that can kind of hold up. Yep, Chad will definitely look at those names. Absolutely, and I'll explain your process to decide to reduce your position. Uncrowd, 100%. Because you're in our Discord, I talked about reducing my position in that because I was very heavily weighted. So I'll talk a little bit about that as well. So yeah, really, really bad break here. We're below the 50-day. We've been chopping around. But the biggest thing to me is that we were starting to trade in this tight range and then we broke towards the downside. So really, really looking like negative action here. No distribution gained on Friday, but we'll talk about distribution days in the slides. S&P, very, very similar, right? We were having that kind of volatility contracting, much more constructive. That was you were right off the all-time highs and doesn't look entirely horrible if we're looking at what's going on. We had the shakeout of the 50 over here, really only what was that, maybe 2 days closing below the 50, and then we rebounded and then we tightened up right near all-time highs. But then this kind of breakdown here, closing below all those moving averages, not positive at all. Looking at the Russell, again, nothing alarming just yet, right? Nothing alarming just yet. Looking like the trend is intact, but a lot of stocks behaving poorly. And we'll talk a little bit about that when I bring up some stocks and things. We'll talk about what I've been seeing in a lot of the leaders that's adding to what I'm seeing over here. So let's jump over to the slide so we can talk some distribution day stuff. In terms of the distribution days for the week, this is where a lot of the concerns started to gather for me as well. You can see that S&P gained 3 distribution days. It's a ton of clustering. The NASDAQ was able to avoid a distribution day on Friday, but we gained 2 distribution days. Those are Monday, Thursday, and then Monday, Thursday, and Friday on the S&P. We lost due to time the 6.5 and the 6.9 distribution days on both indexes. So that kept the count a little bit lower. But regardless, fairly high count still, 9 and 6. Now, I talked about this prior, saying, as we see these days get older and older, they become less valid, less of a weight in my decision making. When we start seeing that most of the stuff is older distribution days versus newer distribution days, especially that we've already saw a break and we've been seeing some chop and we've been seeing some tightening, I start to say, okay, now these distribution days are starting to not be as much of a concern because they're older and the price has kind of just hovered around a lot of those days and just hasn't rallied to 5% above the close to actually wash them out just yet. But it's if the market gives me the signals that things are starting to improve technically and things turn around, the high distribution day count isn't something that is going to make me ignore the technical action, because likely if that action can continue, we'll see those days drop off pretty rapidly. This is a little different though. And now we're starting to see something different, because if we look at this distribution day calendar, okay, so this didn't register over here on the Nasdaq. This is kind of automated, but we're starting to see that clustering start to build up, right? Just specifically on the Nasdaq, in the last 2 weeks, sorry, on the S&P in the last 2 weeks, we've seen 4 distribution days, and then we've seen these 3 distribution days in the last 2 weeks. Um, Things are starting to cluster up in the more recent time frames. And you know what? Now that I'm thinking out loud, it would be kind of interesting to reduce that 25 maybe to like a maybe to like a 12. Would that be? Or just even a 2 week time frame, just to give an idea of more recent distribution versus longer term distribution. And the reason I say this is because myself being a little more towards the swing trade slash position trade style, seeing the more clustering in the tight frame might be a little beneficial. I'm gonna think about that. I'm gonna do some research and think about that as just a metric that I might use, and just keep a round count of, versus just looking at things and doing what I'm doing visually just to have it as a dashboard type of thing. But needless to say, the distribution is definitely a concern, being the way that we broke, being the way that it's clustering in the recent weeks. Now it's back to being something that I'm paying attention to, especially the being that if we look at next week, we'll see this 1 day drop off on the S&P. We'll see 2 days drop off on the NASDAQ. That still brings us, to a 5 and a what do we got? 7 count. Oh no, sorry, 8 count. I mean, what am I saying? Jesus. 7 count. And that's with no more distribution being added. So like we get 2 more days here, we'll be, and only one drops off next week, we'll be at 7. And even if we replace those, we'll still be at 9. So the distribution is definitely becoming a concern again for sure. How would you compare this to the chop we had in August, April, October, March? Okay, let's talk about that. It's a good point. And this is why I love having you guys in the chat so we can talk about some stuff. Very honestly, very similar. So I actually wouldn't say that the August was bad. Because if we really look at August, right, we're August back here. It wasn't as easy as it was in the beginning of the year. But August, where are we? August 1st, right here, right? Like we still had a pretty strong, solid uptrend all the way till, I would say, probably about end of September. Early October is where things, right around here, things started to get really kind of rough. But throughout this time frame, things were really not too bad. It wasn't as easy as it was in the beginning of the year. So to me, the chop started really in October. And that's where things started to get a little bit rough. That's where, if you look at especially the range, right, from here to here, it's just kind of trending upwards, couple shakeouts, not as easy of, to make some new buys if you're buying near some highs in here. But overall, I think if you're buying right, things were okay. But here is where we started to see that kind of choppy range bound action, where if you draw a line right around here, we just kind of went sideways. Where if you draw a line right around here, we went up from that area. So um, I digress. Looking at October, going into really the beginning of this new rally that we got, yeah, things were very, very choppy. Um, the difference maybe here is this chop went on longer if we compare the two. Um, and we actually really, really, it was a little more volatile from what I remember. And we still saw some tightening action, but it was like wedging upwards, where this was like tightening and kind of wedging sideways to downward. So it did look a little bit more constructive, but hindsight's 2020 in the sense of it. Um, the early January timeframe, there were some names that performed well in here, so there was money to kind of be made. I actually had a pretty solid start to the year, mainly because of SanDisk in this time frame and things kind of finding support at the 50. And I think actually that was kind of right around where was that the day? Yeah, I actually bought some stuff bouncing right off the 50 and was able to take a little bit of some trades around here that was beneficial. But look, I don't think you have to get too into it in terms of the differences. I like to think, are we trending upwards? Are we trending downwards? Or are we in a poor choppy environment? If you can classify things into those three categories and then dictate the majority of your risk based on, okay, if we're trending upwards and we're strong or we got the follow through day and things are looking good, then I'm risk on. If we're chopping and sideways, I'm very, very cautious. I'm very, very um, patient and trying to stay away from any new buys. And then if we are trending downwards, which is nice and easy, I'm just sitting out waiting for a follow through day. The other thing I guess you could add technically is we did attempt to make it to those all-time highs and rejected from there where we haven't seen that on the NASDAQ. But again, we saw this all play out. We haven't seen this play out, right? Could this be a dip and a shakeout? Like if you look here, right? And then we rally and we continue to chop? Absolutely. So we really don't truly know. But regardless, I think the main thing is we know we're in a choppy sideways market and we know we should be much, much more cautious and trying to protect more capital than forcing it into the market. And then in March being choppy, where we at March? So I wouldn't even call March choppy. March was a downtrend. This was an easy thing for us to kind of stay out of, right? At this point, we had broken lower lows pretty consistently. Like here was the first kind of break of lows down here. Then we broke them again. Like we had made a series of lower lows. We had broken through that tighter range. This was like March was easy. On March was like it should have been so clear just to be pretty patient. Honestly, if we go back to my videos, I was starting to get real cautious in early February, and I believe I was all cash within that first week of all Feb or early February. So, yeah, I don't see March as choppy. Um, I see March as a downtrend, and it should have been pretty easy to kind of stay out of. All right, let's go into sectors. Let's actually, yes. Okay. So if you guys don't know, Deepvue Partner, this is a tool I use for all my stock screening, fundamental technical analysis. And here we have my little sector tracker with on the bottom, I got all of these sectors and I have a custom column set up, which everybody can do this. And I have all my RS kind of time frames. And let's see, I might switch this to, I kind of like it with the RS. RS compares to the S&P. The AS, absolute strength, compares to all stocks in the database, and that's where those two different indicator or metrics come from. All right, so starting off for the week, energy strong was the leader for the week, but long term, you can see on the RS not performing very well. We had been talking about this very similar to what we were just talking about with the market back in October and beginning of the year and everything. It just going choppy, sideways, tightening, then breaking lower, living below the 50, holding above the 200, but living below the 50. And now it's kind of rebounded above the 50. But if you really look at the general context of things, yep, no problem, Liz. If you look at the general context of things, like this is not like, oh, we got a bottom in. Like I wouldn't be surprised to see this continue to pop above the 50 and then roll back over, to be honest. Anything could happen, but regardless, this is just not something that's to me is tradable. Real estate looked strong, right? This is the daily. Looked like things were strong. It's just kind of got rejected off all-time highs. There's just not a lot of names that I tend to trade in this kind of sector, so I don't pay too close attention to it unless it looks really, really strong, really, really good. So yeah, that's real estate. Consumer staples. Another one that looked strong and then rejected. So seeing a little bit of broad-based weakness coming in. Financials. Financials still look fine. Financials has kind of bottomed here, retook the 50, then retook the 200, pulled back, was trading in this tight range. We had talked about it on here, kind of really looking like it wants to snap and break higher. It did. It got right up to the all-time highs and paused, pulled back, which was somewhat expected. And now it's trading pretty tightly around those all-time highs. Super, super constructive. A little rejection with some high volume coming in with a poor close, but holding above the 10, holding above the 21, and clearly above the 50 and the 200, right at all-time highs. Um, Still worth watching in my eyes if there's a group or a sector to watch. Healthcare, very, very similar. I'm not going to go too crazy. Happening a little higher, out actually making it out of the base. Trading choppy, trading sideways, breaking out, squatting, hitting the 21, holding above the 21 with your closes, and then getting back right above and at those above those all-time high levels over here. Kind of starting to get a little bit looser. The volume pullback was kind of lower with a couple high volume days towards here. And then we're kind of just basically tightening up right at those all-time highs, or not tightening up, but sitting at those all-time highs. So healthcare, another one of those sectors along with financials that kind of paying attention to. If you look at the 3-month, you can see those both in the 80s, which is pretty good. Utilities, holding above the 50, but looking weak. Materials, just been chopping around the 50, looking weak. Communications has been really weak. Industrials, okay, so industrials, it broke out to all-time highs and it's pulled back and squatted and held at the 50. It closed above the open for the day. It's still below the 10 to 21. This is like a third kind of sector that I'm looking at, paying attention to just slightly. If you look at the 3-month time frame, we're at a 71. So consumer discretionary looks weak, below 200. And tech now looking very weak. Prior to last week, tech was looking constructive, just like we talked about with the market. Kind of shook out below the 50. It was holding those lows. It was kind of trending sideways, seeing a little bit more tighter high swing highs and swing lows. And then now we've seen a pretty big break. We've seen the volume come into the downside. We broke below and these highs here and into this range here, creating the first really true what I would call swing high, swing low, being a lower swing high, a lower swing low. So tech looking very, very troubled right now. But yeah, so just to give you a quick context too, if we go to this 3-month, all right, healthcare, financials, industrials, that's kind of right now where my eyes are watching and where I think we're seeing the most strength. All right, now let's jump back over. Not there. And let's look at what is going on. They have sectors. So my ranking, this is a little longer term. That's why I like to do things also, chart by chart. We still have tech leading out. We still have energy. Like this is going to take a while. This is longer term. It's going to take some time to see the kind of rotation. So this is longer term, and that's why I like doing things in the way I just did. Now, in a correction, if we get a decent correction, a decent amount of term, this then starts to become a little bit more important. But that's why I'm not really worried too much about the rankings. All right, let's talk industry groups, and we'll talk basically the same thing we were just talking about, long-term rankings. With all the rotation, the long-term rankings are becoming much, much less of my watch, which is why I developed my short-term rankings. So this is looking more on the longer term, closer to 12-month. It does have some short-term timeframes tied into it, so it can pick up on some rotation. But at this point, with how much rotation we're seeing, it's really about the short term for me. This will be more in the 1-month time frame. This is much more rapid and adjusts more quickly. So you can see where we're at in terms of the ranking. Cybersecurity sitting up there, genomics, the healthcare stuff. We see some software percolating in there, more healthcare stuff, some restaurants and things like that. Payment processing. This is one that has been definitely jumping up and emerging. And you can see these are your names in there that are causing that. And if you kind of go through looking some of these names, you'll probably see some setups and strength in there as well. So one thing you can do So if you are on a phone, you could screenshot this, and I believe you should be able to, especially on iPhone, copy and paste that if you wanted to do that. But yeah, so we're starting to see really what looks like it's the only thing that's holding up is really the cybersecurity, the healthcare stuff. The oil, gas, refinery, marketing, these names have made a nice big jump with energy. But again, I think the energy sector is something I'm looking to stay away from until it's really holding higher highs, higher lows, and starts to show a sustained uptrend. Um, Leaders for the week. So kind of seeing this again, cybersecurity populating. We're seeing the real estate and we're seeing some energy stuff. And then the laggards, you know, a lot of those prior leaders really, really getting hit and lagging. We're talking about 171, I believe, groups that I have, and these were the top 10 worst for the week. So, rapid movers, we'll look at those. This is just looking who's making the biggest jumps within the long term rankings. Um, Cybersecurity back into the top 40 now with a huge, huge jump. And you can see a lot more of what we're seeing on the short term. So I like having all these different views because it helps things just really stand out to me, right? Like we're seeing the metals not doing well, which isn't a good sign. We're seeing the quantum, the space, the lidar, a lot of the names that we were talking about prior really dropping significantly in the rankings. And then here we're seeing some of these names making big, big jumps. So then we're also seeing things in the short term, the leaders, getting a little feel and a look for everything is the way I like to do it. Not necessarily just looking at it from one data point or one perspective. All right. So let's jump over to Deepvue. And I didn't mention this, but in a link in the description, if you guys want to check this out, I have a free month code so you can try it out. No risk, all free. Try it out, mess around with it, ask me questions, see if it works for you. I think it's the best tool out there, especially for people trading our kind of swing position, momentum, CANSLIM style of trading. And there's just so much customizing in here, which makes it very, very nice. It's something that I love because it gives me the ability to see only what I want to see. And yeah, if you're interested, just let me know. And then I also have a 12% off of an annual membership. Or if you use my link, there's sometimes some other codes too. So if you're looking to sign up for an annual, just shoot me a message and on any of the platforms, and I'll help get you a good price. All right. Let's see. All right. So first, we'll talk about my stocks. Chad, you had mentioned me talking about crowd and my thought process behind crowd. So as you can see, I had 3 buys in crowd. Um, This was something I'd kind of talked about how much strength we saw coming into cybersecurity. Not just that it came up this amount and just had this huge strong rally, but while it was really bucking the trend and the choppiness of the market and really sticking out. And I'm not looking to buy in here. I want confirmed uptrends. I want to know institutions are putting money into this because they are going to be, if they are truly buying this, going to take a while to build their position. And I want to follow their coattails. But I want to see it first. So this is the confirmation of okay, this looks like institutional buying coming into this. This looks like a complete trend change. We're back above the 200. And knowing that after a big, big rally like that, we're going to get normally some sort of an opportunity where things are going to break, especially on these bigger cap names. And we got just that. We had the rapid pullback to the 21, and then we got really, really tight. On this day right here, as we were starting to trade tight, I decided to buy that clear bounce off the 21 EMA. And that was where I started my position. Very, very low risk entry, and gave me an opportunity to put a decent sized position on. Then, as we broke out over here, I added a little bit, just a little bit. And then as we broke out here, I added a little bit more. So basically, built my position with these 3 buys. So it was the breakout, then we had the pullback handle like action, and then we broke out again on high volume, and I bought as we were breaking back out. Because of this, I built a over 30% position in my portfolio in crowd. For me, clear leader in terms of the group. Uh, Easy low risk setups for me to get in. leader in the cybersecurity space for sure. CANSLIM fundamentals like accelerating earnings, accelerating sales. Not really earnings on the annual as much, though overall, I mean, it looks good if you're looking at the average of the last 3 years. Good earnings, sorry, annual sales. We're seeing institutional sponsorship, ROE not there, but considering everything else, not a big concern to me. Really, really strong relative strength when you look across all the time frames. And this is obviously not back here is a little bit different, but where we're at right now, and the RS line trending upwards. And now, what couple things led me to this? Number one, heavily weighted position. Given the current market, given everything that's happening, I did not want to be too heavily weighted in anything. Should we see a rapid break? So that was the first thing. And we saw the pullback down here. And that was the second thing. Now, this is the kind of second attempt at a breakout, and we're seeing just rejection. And even here, we looked like we wanted to rally, and then we got rejected. So we're seeing some resistance at these levels. So given the high weight, given the market and how it was behaving and how it was acting, because crowd I trimmed on, when did I trim crowd? I believe I trimmed cloud on Thursday, if I remember correctly. Maybe Friday. I honestly I can't remember, but whatever. I trimmed crowd around this area, mainly because of how the market was acting, how heavily weighted I was, how we were starting to see some resistance to the upside. Coupling all three of those things together, I decided to reduce my position. Now I still have a 20% of my portfolio in crowd. I have plenty of cushion in this name. It is overall behaving fine, but just not the type of market where I want to be so heavily weighted in a name. Take some profits off the table, really de-risk this trade, give me the ability to let it do its thing. And if the market does pull it down, which as we know, we talked about early in the year, if the market wants to go in downtrend, even crowd is likely to get hit and get hurt. Uh, I don't know. I got to see the dashboard. I don't think I'm going to be able to make it available to everyone. It's built and like kind of housed locally in my computer and in my cloud. And for me to release it to everybody would require a different data source that I could use and have it being accessed from multiple IP addresses. It will require me to restructure things because now I input data that reflects for me. So then I don't want anybody else to be able to access it and like change anything that I'm doing. Likely not. But I will say this is, the dashboard is something you can develop on your own. And it is, I am not very smart. I'm not very tech savvy. I mean, I'm decently tech savvy, but with AI today, the ability to build your own dashboard is pretty easy. Basically, what the reasoning was behind that build out, I'll bring it up, is I was completely just getting rid of Excel sheets. So I used to keep track, and for anybody who's been following me for a while, I used to keep track of a lot of this stuff, distribution days. A lot of this stuff was just being tracked through Excel sheets. And even with Excel, there was just still some data crunching and copying and pasting of numbers and things to build this out. And time consuming. And then honestly, another big piece was doing this. I would put slides together and a lot of copy and pasting. So this just completely probably saved me a couple hours a week in terms of my workflow with this stuff. So um, it's look into Claude, and you don't have to know anything. You could literally just tell Claude what you're trying to do, and it will help. It does take some time. It's definitely something you got to kind of play around with and and be willing to get a little frustrated with certain things, but it'll work through everything that you're going to experience and help you out. So, all right, back over to Deepvue. So that's where I'm at in crowd. Now we have CGON, CG Oncology, Healthcare Biotech name. Name I've been watching. I know you're going to say right off the bat, right? The earnings aren't there, but incredible, quadruple digit sales, accelerating sales. Um, So something that kind of couldn't ignore. Younger name, right? We had this big kind of base here. It started, it's now clearly trending upwards above the IPO. Had a good 43, and this is cool thing with Deepvue. So you can put in the base pivots, which is what I use. You can actually control the time frame on this and really play around with these settings to develop it how you want it to look, how you want it to look back, like all this different stuff. And so here you can see from here, we got a 43-day, 30% base. So classic base. Um, we got the handle, and now we're starting to get more of like a VCP type of action where we're seeing like that kind of third pullback, but a little bit higher, holding that 21 EMA. So very, very constructive. Pretty good fundamentals for a biotech for sure, and institutional sponsorship growing. And the big thing here in a leading sector and a leading industry group for sure. So this is something I've been watching very, very closely. And here showed incredible relative strength on Friday, where everything else was getting hit. It shook out below the 21 and reclaimed the 21. And as it was reclaiming the 21, I put a small position on. This one is 12 or 13%. These are, but one is 12, one's 13. I forget which one of my portfolio right now, with a very, very tight low of day stop. And it luckily worked throughout the day and was able to get me in. So you can kind of see, where are we? Friday. I was buying in the first hour as we started to take out these kind of levels right here on the 65-minute and reclaim that 21. And then luckily it ended up working out, but it was a low risk entry. So, yeah, right now I'm just going to keep watching this. I'm going to keep my stop now, basically at that low a day, and see if this can kind of a little bit buck the trend, smaller position. Um, and that's the reason I was willing to take this trade, because it kind of checked all the boxes for me. Next one. This one is a huge shout out to Steve Sweats. If you guys don't know, you didn't get a chance to watch, third month in a row, I was able to sit on Alex Marenko. He has a monthly meetup group that he does. He covers very in depth the market and everything else, like way more in depth than I'm doing, and also even just adding life stuff into it, health stuff, bigger financial things that he talks about. He was a former project portfolio manager for William J. O'Neill, so very, very knowledgeable, doing this for a very long time. And obviously, most of you guys watching know Steve Sweats, professional CANSLIM trader, doing this for himself for decades now, and got to join those guys again for the third month in a row, which was an absolute honor. While Steve was talking, he brought this name up, and I hadn't seen it. So I was kind of looking at it on Wednesday night and watching it. And the big thing that stood out to me was you have this big multi-year base when you're looking at the weekly. We got the trend turning up over here on the weekly. And then when you zoom in on the daily, now this is like a base on base multi-time frame thing. We're seeing, again, somewhat of like a VCP type of pattern, very similar to what we saw in Seagon. Now this is a digital marketplace designed to streamline sourcing of custom manufacturing components. So in the industrial space, because we're starting to see things perk up, and the fundamentals on this are great. You can see triple-digit earnings, great sales, accelerating sales, triple-digit annual earnings, good annual sales, great funds poured into this. ROE not so great, not too crazy of an ATR, in the stage 2 uptrend, and this was showing a lot of technical and fundamental strength. The other thing, right at that kind of century mark of that 100 level, and if they do break above those 100 levels, a lot of stocks, just because of that round number, they tend to go on a run from there sometimes. Century mark does tend to be another area people look at, and institutions, and I think everybody look at. So this looked really, really strong, had very, very similar action to what we saw with Seagon, and very, very similar entry was on Friday morning. I saw it flush out through the 21 EMA, and then I saw it reclaim that 21 EMA. And as it reclaimed, is when I started to put that position on. I did wait a little bit. I think I didn't get in till about here when it took out the open, because I know I got in a little higher. I believe I got in like 90, I think it was like 94.75 ish around here. So as it gapped up over here and I saw it take out the open and reclaim that 21, I put a 12 or 13% position on this one with the stop at the low day, again, keeping things pretty tight. So good to see that high volume bounce, reclaim the 21, sitting right below all-time highs, and everything else that I talked about is what brought me into putting this as another position. So with all this being said, in terms of my exposure levels right now, if I remember, why am I drawing a blank now? 45% exposed, I believe. Yes, 45% exposed to the market to the long side. And that I'm comfortable with. That's probably for me. I'm not looking to go over 50, though. I could see some people that are willing to be a little higher than that. So that's why I mentioned the 40 to 60% being okay. All right, we'll look at some of these stocks, but let's just talk about some of these prior leaders real quick, right? Here's your SanDisk. Here's my buys and my sells in SanDisk. I kind of marked these up for the meetup with Alex, but things are starting to get wide and loose. We broke below the 50, 10, now 21's almost crossing below the 50. We've seen some high volume declining off of these highs. This has gone on a really, really strong run and looking like it is some topping action. We're seeing the same in MU. Very, very similar action in MU. We're seeing same in Western Digital. We're seeing the same in, whoops, one too many X's. There we go. We're seeing the same in Seagate. Memory clearly getting damaged across the board. This is why this was not a buying opportunity for me. Things are starting to get looser, right? Especially when we look at SanDisk. Things are getting wider and looser. Somebody actually, I think, had asked me why I was not buying back on the reclaim of the 50. This is later stage. It's gone on for a very long time. And there's a big difference between pullbacks, right? And then these breaks. Now, I'm not saying, look, if I had to choose, I think this is topping. If I had to make a decision, again, you guys know me. I don't know. Probability is pointing to the highest probability of it topping. However, if it's not, once we start getting down here, at the very least, I expect that we need some sort of a base to form. So it's no longer, to me, in my head, that these are pullbacks as much as is a possible base forming. And that gives me the time to sit back and let this kind of work its way out. And if it gets and sets up and looks much better, then sure, I'll be willing to take a buy on even this later stage base. However, now we've seen this break, and even if it was to rally and take off from here, it's just not my trade. I'll let it go. It's been fine. SanDisk has been great to me. MU has been great to me because they're both acting the same. So seeing these leaders really, really start to collapse has been a huge thing. Now, there's a lot of other names, right? Lattice, whatever, LSCC breaking down, Rocket Lab breaking down, another tech name breaking down, Marvell breaking down, Teradyne breaking down, Fix breaking down. What was this one? Sterling Infrastructure. So look at what we're seeing. Look at how many of these names and I'm sure a lot of you have been watching these names, are breaking the 50 and breaking so with vengeance, right? This is just something I've been watching longer term. Quantum breaking. APH, another name that looked really good, but just breaking. Yes, it held the 50, but just, again, this big drop, I'm not expecting a V-shaped recovery. Form. I mean, we're just going to keep clicking through these names. Corning. Look at how many of these names that were names that a lot of us are watching. Max Linear. Nubis, whatever you want to call it. And Tab actually looks decent. Some of these names up top look okay. A lot of these names behaving poorly. Dell, right? We saw the big. Everybody knows my thing with Dell. Bullet stopped out. Bullet stopped out again. Didn't put my stop in because I was an idiot. And we all make mistakes, and I can't make that again because I didn't have a hard stop in, and I didn't get to it quick enough, and it took a 10% loss on that one. Wolf, like just all of these names, look how poorly they're behaving. And a lot of these names are names that we've been watching. That brings a lot of concern to me when I'm starting to see what led this prior uptrend really getting hit. Now the S&P was looking better. So I'm like, okay, maybe we're seeing some rotation. Maybe we're starting to see the tech's going to take a break. We're going to see some of these other names start to, carry us, and maybe the S&P is going to diverge from the Nasdaq, and we'll see some stuff working there. But now that's even kind of falling out as we saw the big break on Friday. So just how the stocks are acting, how the indexes are acting, and now as much as I am a top-down trader, I do look at bottom up. Like I hate when people try to say, well, I only look bottom up or I only look top down, right? Why not do both? Why not look at things from both perspectives? So I'm looking at what's happening in the overall market. I'm looking at what's happening in stocks. And when everything is acting the same and everything's behaving perfectly, ideal environment. When there's a divergence between the market and maybe stocks, okay, I'm going to kind of look at what the market's doing and maybe there's an area I'm missing that has a lot of strength. When the stocks are acting really bad, but the market, when the market's acting really bad and their stocks are acting really good, okay, well then that maybe says this might be where I want my focus to be, which is kind of like how SanDisk and MU and everybody were. But when I'm starting to see more broad-based bearish action, it gets me much, much more bearish. So, and when I say bearish, I don't mean that like, oh my God, we're going into an insane correction. It just means from my time frame, my swing position trade time frame, that I'm going to be risk off. So I'm looking at things from both sides and things don't look great. And that weighs a lot in what's going on in the market. Now, again, you're going to say, well, you took these positions, right? These are very, very low risk, very, very low risk trades. And, in industry groups that I think are doing well. So I'm not going to look to continue to trade. I'm not going to look to put a ton of risk in. I'm not going to be jumping to just keep, increasing my exposure. I'm going to keep my exposure very, very low. And if I get stopped out of these, then I'm likely just going to be probably sitting in cash. So understand that, yes, as much as I'm making new buys, they're very, very low risk entries. They're keeping my exposure levels still on the lower side. And the market hasn't completely washed out where I'm like, oh my God, I need to be in cash. So understand that kind of balance. It's not all or nothing. Okay. Back to the top. Let's start talking about some of these names. All right. Liz. And you said, don't be afraid to poo-poo things. Don't worry. Still learning to screen, looking for bases or whatever. Yeah, no problem. That's why I'm here. All right. So, consumer discretionary. I kind of, I don't know if you saw, but like the restaurants have been looking a little bit better compared to everything else. This is Chili's. A couple other. I do love Chili's. I think Chili's is probably one of the best out of all those kind of chains. So we see a kind of big base here, right? Just big consolidation, whatever you want to call it. It got as deep as 41-ish%. And now we've rallied right to those highs. I see the big base. I see why there's a tension here. But I think the expectation here, because this isn't a real base like you would see in How to Make Money in Stocks, right? And there's a reason why this is not the same as what your traditional base is. Because I think what's likely going to happen, right? We've just reclaimed the 200. This is now my uptrend. Right? This is my uptrend. Now I'm looking for a base within this uptrend. This is just sideways choppy market. This is now starting a stage 2 uptrend. Now I'm looking for a base on here. Ideally, like I was kind of talking about, that base forms right around these all-time highs, and then that's our next leg up. So that's one of those things to think about. Yes, there is, when you look at the weekly, a giant base here, but it is wide, it's loose, it's sloppy. It's just not a real true base. It's important to pay attention to because it's that multi-time frame thing that we talk about, and there's definitely some relevance here because if we break above these levels, well, then everybody essentially that owns this name should be in the green, and that plays a lot into it. And it looks like institutions are then buying this up. But where we're at right now, sitting below those levels after a big, strong rally, reclaiming the 200, starting that uptrend, that stage 2, Stan Weinstein stage 2 uptrend, I want to see this base because I think there's more likelihood, not that this is going to continue higher, but that this is going to at the very least pause. So watch, yes. Buy, not yet. ATMO, Atomera, information, technology, semiconductors, automatic no. Instant no. Instant no for me. Yes, I see the fundamentals, right? I see the triple digit sales. I see the increasing institutional sponsorship. Absolutely. Something to realize is that the fundamentals, when something is topping, the fundamentals are very often, well, this isn't even really topping, but the fundamentals will not always dictate that the institutions are buying this, right? So just because something has good fundamentals does not mean that I'm willing to buy something. I need to see the technical action showing that the institutions see the fundamentals and the institutions are buying. Tons of upside resistance. Yes, we had a nice, real big rally here, but we're back below the 50. The 50 is rolling over. We're well below the 50 at this point. We're 30 something percent below the 50. We're 50. What are we at all time highs? At 52-week highs, we're 54, 58% depth, whatever you want to say. We're very high off those most recent highs. So this is an automatic no for me. I'm assuming you mean grinder. So don't see a ticker. I'm assuming you mean this. You can let me know. All right. This getting wide and loose. A lot of upside resistance. Yes, we had a really strong rally. It's starting to get loose. It's holding above the 21. I could see a reason to want to entertain this in this market. For me, definitely not. I think it's constructive, but it's, it's tight and then got wide and loose like the market. And the market environment's everything for me. And this is just not an area that I'm entirely looking to entertain. Now, look, this could tighten up. This could form a bit better of construction, but this is more of a sit, wait, and see. I have a feeling that the probability, I don't want to say I have a feeling, the probability I think of this is we kind of chop still sideways around here. That maybe this was that kind of shakeout. We saw a bounce-ish off the 21, and then we kind of go sideways. Worth paying attention to, worth watching, 100%. Just not my type of trade. HEI. Oops. Strong uptrend. Now see this V-shaped recovery, pulling off the highs, starting to hold. Looks like it wants to. Did we close above the 21? No, we closed below the 21. But whatever. We're kind of like look like we're forming possibly some sort of VCP type pattern. Big base. Looks like we're maybe getting a handle over here. Maybe this was the handle. Maybe we're squatting, whatever you want to call it. Broke out, pulled back in, holding that range. I would watch this one. Industrial's doing well. Aerospace also doing well, though I can't trade a lot of the aerospace names. So I would watch this one. But it's starting to get a little wider and looser. I'd like to see this kind of form a little bit more of a base. Slab. This looks like a buyout. Yeah, this looks like a buyout for sure. All right. Data Dog from Chad. Look, very, very similar action to what we're seeing in Crowd. A little more constructive than Crowd. Because Crowd kind of broke and got a little sloppier. But no, this looks great. Look, accelerating sales, accelerating earnings, decent annual, okay annual. Um, institutional sponsorship. No ROE, but is what it is. Software has been showing a little bit of strength. Not too crazy of an ATR. Good RS here. Good RS here. Decent on the 1 month, but overall, I think RS around here. Um, again, falling into that kind of cybersecurity space and looking constructive. Um, if you bought this off the 21, I think nothing wrong with that. If not, I'd probably be looking. Let's just do a little quick analysis here. Yeah, if we broke those levels, I'd be happy. I'd be happy buying something if it was to break through here. And then you just got to understand. I would probably personally put my stop at like your usual, if you're what your max stop is, maybe like a 7%. But again, understanding that if the market does continue to deteriorate, that the likelihood of that breakout working becomes much, much lower. So I could see this. Would I personally like, let's just say, because I'm not going to buy this because I have crowd, but let's just say this does break out. If the market holds the lows that we have now, I might be willing to take the buy. If the market continues to look weak and hold those levels and just continue to act the way it's acting, I'll let this break out and I'm just gonna just sit on my hands and let it be. And this is the hard part about choppy markets, right? This is the hard part about choppy markets because, like, look, this looks like a great setup, right? This looks awesome. But look at how things are behaving. Look at how the market's acting. And you may see this breakout with high volume and be like, leading industry group, oh, I really want to buy it. Okay. Just understand, like, you have to manage your risk. So if I was to buy it, it'd probably be a smaller position. And it's also going to weigh with what the market's doing and how the market's acting if it does break out. Just you also have to look at how frequently have you been trading, how much risk has you been putting into the market. This is where things don't just become clear cut for everybody. I think, look, it's constructive, and if it does break out through here, I could see wanting to buy it. Just from your own trading perspective, you got to understand where you're at in risk, and what amount of risk you're willing to put in a position like this, knowing that there's a little bit higher of a probability of this failing. Like I talked about it in one of Alex's groups. I gave a presentation called what I call stacking probabilities. You want the market, you want the sector, you want the industry group, you want the stock, the fundamentals, the technicals. When everything lines up, right, like a SanDisk did, that's where I'm willing to be much more aggressive. When certain things are missing, I'm a little less aggressive. And in this market right now, if things continue to behave, they are behaving, I could see a reason to take this trade because there is some positivities, but there are some things that are showing me of concern. So we haven't rolled over just yet, so I wouldn't say I wouldn't take any new buys, but this is looking pretty constructive. So I can see a reason to take it now. Just make sure you're managing your risk. Let's see. Look at LQDA. I feel like somebody brought this up recently. This definitely was brought up. I'm assuming you own this already. Who is this? Ben, I'm assuming you own this already. Let's see. Have to go now, but maybe you can look at LQDA to see if it's a good opportunity to get in if there's strength in the healthcare next week. Okay, perfect. Definitely not a good opportunity to get in this one. To me, this is extended. It's now the second test of the 21 EMA. This type of market, I'm just not willing to get into something like this far out. Um, if it's your style to take a trade off the 21, just understand where we're at in terms of the trend. Could it bounce and keep going from here? Absolutely. Absolutely. Like, look with SanDisk. There's a swing trade to be had here, right? Even here. But just know it's a little bit different of an environment. Yes, this is a leading sector, so there is that too. For me, this is just not the type of buy I want to make. You know, and most of the time when I'm buying pullbacks, it's an add-on for me, as not as much of a new buy. I'd like to see a little bit more consolidation if it's going to be a new buy, like a little tighter and a little more drawn out. So yeah, for me, this is a no in terms of a new entry. If you have it, it's acting great. If you have it and you maybe added on the around the 21 a little bit, that's fine. I just don't like this as a new entry for my style. Okay, are you watching these stocks to catch a stock taking out a level? How do you manage that with work? Okay, so that's a good question, Liz. So I'm assuming you're referencing these two buys. Number one, I work word shifts. So there are opportunities where I can be in front of the market more often in the morning. And that warrants me the ability to be using 65 minutes. And then even I'll sometimes even go down to a 5 minute just to see, like when I was looking to see us take out the opening 5 minute bar, and this kind of showed. And then where are we here? This was a little different, but I guess it did take out. But yes, so I am home at times, and this is also one of the things I love is that on the Deepvue key moving averages, this lower time frame, I show my daily moving averages on a lower time frame. So these, and why you see them jumping is because they're dailies. So they're going to be jumping with the daily, calculation. Gives me the ability to do this. Now, I don't like to do it all the time. I don't want to be forced to do this in terms of my trading style, because whether it be work or life, I don't want to have to sit in front of the screen, and I don't sit in front of the screen. I have my watch list. I have the names I'm watching, and I just am monitoring them. If I happen to be in front of them at the time and can get in and get a good entry, great. If not, then I'm basically just operating off of my alerts and making the decisions the night before. So these were two names that were on my watch list, and I watched them open. I watched how they behaved. They gave me the good entry. So I'm lucky to the point where, as much as I do have a full-time job, I happen to be home during the day or during market hours very, very often, because I work a lot of overnights and I work a lot of afternoons, and that warrants that ability for me. So, do I have the charts open that I plan to buy? No, not necessarily. Like, I'm not staring at the screen, right? We're not day traders. Normally what happen is I'll, because I do tend to wake up a little later because of my work. Um, Market will open. I'll have my laptop up. I'll be kind of going through some of these names. I'll have, let's just say, a watch list like this, and the market opens, and I'm just kind of like flipping through the dailies and just saying, all right, what are they doing today? And then I'm doing other stuff, and I'll kind of keep checking back on them. And sometimes in a situation like this, I'll set an alert. But now with these names specifically, like I saw it, it happened pretty early in the day. Like, so I happened to be sitting there as this was happening, because we had the break. I was still sitting, and within the first half hour, I happened to be sitting down. There are going to be times that this stuff happens later in the day, and maybe I'm not there. And if I didn't set an alert, I'm not going to see it. But it's not such a core piece of my trading strategy that I feel that I have to be sitting in front of the screen. It is just when I have the opportunity to use that tactic because my lifestyle at the moment is allowing it, I will use it. But in other situations, like if we look at SanDisk, right? We started to get the follow through day. I don't know what time of day I actually bought it. I do know it was here on the 8th. It gapped up through levels. It was a follow through day happening, and I pulled up my charts and I said, "All right, SanDisk is the name that I've been dying to get into. It's broke out, and I bought it." I wasn't so strategic as much at the entry as it was a breakout buy with a flat stop based on a follow through day. And earlier in an uptrend, I will be willing to buy more breakouts. Um, Later in an uptrend, I am tightening things up much, much more tighter. I am a lot more of buying tightness in the bottoms of consolidation that look very, very strong, like a crowd, like an Eli Lilly, which I sold this week because of the break of the 21. Got away basically because, I was willing to buy a little bit. I forget the exact day, but buy around this tightness versus buying up here because we were later in the uptrend. Things are getting a little sloppier. Looking for that tighter risk entry and support areas. So my style kind of does change through the trends. Earlier in a turnaround market, I'm much more traditional CANSLIM breakout buying because that's when it works. Like that's one of the things people forget. Like a lot of the model books, a lot of those stocks in the beginning of the book, CANSLIM works the best coming out of a follow through day, and that's why it's so important to be, as a CANSLIM trader, very, very in tune for that follow through day and be increasing your exposure, because within those first week or twos of a turnaround in the market, and when the market starts trending upwards, like we had, I'll just do it on the QQQ so I don't have to switch screens. When we started having this turnaround, right, there's the 8th, and then we started like the first few days right around here is where the majority, and this was like a lockout, right? This went parabolic, but the first few days is where a lot of those entries need to be made. And that's where I'm buying a little more of breakout style. As we get later in the uptrend, as things start to get a little looser, I'm buying more support with tighter risk entries. So my style does switch a little bit. These are more position trades. Like SanDisk was more of a position trade that I kind of just traded, added small areas, took profits here, then added and things like that. So this is more of a position trade. Where with crowd, right? This is like a swing position trade. I entered a little tighter down here, added a little bit as it went on, and then because of just how it was acting, yeah, like if this was a longer term position trade, if this was early in the market, I'm not touching this. But I'm a little quicker to take some money off. I think it was like a 15% profit because of where we're at in the market and how the market's behaving. So hopefully that long-winded answer gives you some context of how I trade. Now, again, everybody is going to trade different, right? What I do works for me because of my lifestyle, my personality. Um, it might not work for you. There are people who can't. There was a point in my life before I was an air traffic controller where I worked in a recruiting sales job. I couldn't be like this. I couldn't be on top of the markets. I traded a lot more where I had to make my decision the night before of a breakout point and either set my alert or set a buy and let it trigger itself. Nothing wrong with that. But that means there's things that you can and can't do because of that. The same way, if I'm going to be a tight trader here, there's things that I can and can't do, right? I might have to take multiple losses in a tight swing trade with very, very low risk. I have to be willing to buy something back like I did with Dell, which didn't work out. But I have to have that ability, even though it didn't work out, to buy something back should it re-break out. Because I had a tight loss right around here, and then it broke below it, and I sold, and then it re-broke out, and I have to have the ability to rebuy. And I have to be willing that maybe I'm going to take a couple small losses because of that style. So this is where I tell people all the time, this is where things get very dependent on the person. CANSLIM in and of itself, I think, is very, very good. And I kind of talked about this in Discord, that pretty much everybody can trade CANSLIM. It's very much like the Darvis style, where it's like you could, if Darvis could trade through, um, was it telegrams? What do you call those things again? But if Darvish could trade that, traveling the world without the internet the way he did, and granted, look, he did a lot of work to make that happen, but if he has the ability to make money doing it that way, you can make money with a regular day job, even if you can't. There are people that sometimes don't even have time during the week to really do anything except maybe adjust their stops because of their life. They're still trading cancel. They're still trading a specific style. They can't trade like a Ariel Hernandez or a Christian Qualamaggi or Oliver Kell maybe or Lance Bernstein. Like they might not be able to do the same things that these people do because of their lifestyle. Though a lot of the principles of the market are very, very similar, and things are rooted, and the actions are rooted in a lot of the same understandings of how the market works, if that makes sense. Because of this is something I'm gonna add. If you're a newer trader, I talk about a lot of what I do, but I think for the newer trader, especially because most newer traders are also working full time jobs like I am, and most people that work full time jobs don't work 9 to 5s or normal hours, unlike me. The canceling style can be operated, it can work. Not only that, the canceling book has a ton of very clear stops, entries, rules, right? You buy a breakout of a base that has specific structure, that has a 5% buffer zone, that gives you a 7 to 8% stop, that gives you specific metrics that you're looking for, the CANSLIM criteria. It's very, very easy to do your post analysis because everything's laid out in that book. And this is why I think in the earlier years, it's very good to just simply focus on that. When you start trying to tie in maybe some more swing trade style or a different type of setup, or you are not at a point in your early years where you understand the pros, the cons, and the differences of that piece and how it fits into CANSLIM, right? The CANSLIM book in and of itself is all designed to work together. If you start trying to take other things and mend it into this, you may be creating a losing strategy. So if you are newer, the best thing I think, and I did it for 5 years, I traded strict CANSLIM. I followed the CANSLIM rules. When I did my post analysis, everything I needed to do my post analysis was in that book. And then as long as I followed those rules, I had, normally decent success. If I didn't follow those rules, it was very clear. I said, oh, look, I bought at 7% out of the base, or I let this go to a 8.5% stop, or I bought when the market was in correction. I bought with high distribution days. And this is why I think it's so important as a newer trader to, in my opinion, being somebody that wants to trade these strategies, focus on CANSLIM. And people hate to hear this. They hate to hear this. Like 5 years. That's what I really think. And there's multiple reasons for that. Number one, the amount of I read that book every single year, if not multiple times a year. I've listened to that book on Audible probably over 25 times. I can't even count how many times I've actually listened to that book. The amount of times that even in recent years I'll listen to something and either I'll be like, I never really truly understood that because I didn't have the experience and the knowledge to really grasp what was being said, or I'm like, wow, you know what? I've totally forgot about this piece and it's something that's kind of slipped my mind and kind of deviated from my strategy and it's corrected me. The amount of knowledge in that book, you're not going to process it even in 5 years, but you'll get a good grasp of knowledge. On top of that, every strategy works different in every single market. So if you experience CANSLIM, let's say you started trading right around, you read How to Make Money in Stocks in March and you opened up an account at the end of March and you saw that we were in a correction and then we got the follow through day and we started buying, you might think this is the easiest market in the world. And then we get to this choppy time frame and you're like, what's going on? Let's say you're somebody who started trading now and you're like, why is nothing working? The strategy doesn't work. And then the downside. So strategy operates different in different markets. Not every rally is going to be like the last rally we have, right? We're not always going to have a lockout type rally where you can't buy something. Not every rally is going to roll over the same. It's not going to trend the same. We're not going to chop the same. There's always going to be slight differences and nuances. And I think that 5-year time frame is likely going to give you some form of market correction, some form of choppiness, and some form of a good uptrend. And differences in between all of that, different industry groups. You're going to see rotation. You're going to see all these different things, and it's going to give you enough experience under your belt, I think, to then be able to, if you're and this is again, and I know I'm ranting, I apologize. If you are doing this, it's not just a matter of just doing it, right? It's not just a matter of saying, like, I've had a trading account for the last 5 years and I've been trading CANSLIM. You have to do the work. You have to be putting in the time and studying and rereading and doing post analysis and screening every day or screening every week and doing the work behind the scenes so that that 5 years actually means something. Just 5 years of haphazardly trading and not doing the work is not going to be the same as somebody who's extremely dedicated and committed to trading. There are so many resources out there. The IBD YouTube channel and Mike Webster's YouTube channel. I live in those, especially the IBD one and the videos they used to put up. And Mike Webster's YouTube channel wasn't around when I first started trading, but I would have lived in those videos, taking notes, rewatching videos 4 or 5 times and taking notes. And I think you should be if you're newer in trading. But focusing on the materials that are tied strictly to how to make money in stocks. And if you start seeing stuff that's a little outside of it, maybe you watch it, but you just don't deviate from the rules within in how to make money in stocks. And don't start trying to create your own strategy without the experience. So, look, one of the things, and I say this all the time, trading is no different than any other skill, any other career, any other thing in the world, right? You can't expect to be doing something for a year, 2 years, 3 years, even 5 years, and expect to be a top level competitor within that space. It's just not realistic. Yes, there are outliers, right? There are the few people but when you look at those outliers, and here's something to add to that. What the work that some of these people put in 2, 3, 4, 5 years is stuff that most people aren't willing to do. Became an actual obsession where they eat, sleep, breathe the markets. And they just put in, probably in those 3-year time frame, they probably put in more work than most people put in 10. And you can't compare a 3-year time frame to see someone become a top trader and maybe what you're doing if you're not doing the identical work. This is not something, if you're going to be successful, where you can do this half ass. It's just not. And the more work you put in and the more studying and the more learning and the more dedication that you put into this, the faster that is naturally going to come. It's not about calendar days. It's about actually hours doing the work, hours studying, hours looking at charts, hours trading, hours looking at the market. That's what matters, not the time frame. And I wish I could say, like, instead of like a 5-year time frame, say you need, however many hours, whatever the old saying is, like, yo, you need 10,000 hours to become, an expert at everything, whatever it is. I'm sure it's different with every sport and every endeavor. But that mindset and that approach is what you really need to take it to it. And then after all of this, and this is where trading's tough, man. It really is. After all of this, right? You can have a black belt level knowledge of CANSLIM. You can have all your rules dialed. You can have everything where your knowledge and your skill of trading is at an elite level. If your psychology and your mindset is not there, it all means nothing. It all means nothing. Because you still have to execute. You still have to be able to take the knowledge that you have and make those decisions, which is not easy. We're dealing with the market. You're dealing with your hard-earned capital. You're making decisions that either gain or lose you money, and it is going to pull on your emotional strings. And when that happens, it can make you make stupid decisions and make you deviate and lose discipline. And everybody could say, I'm disciplined. I'm going to be disciplined. It's not that simple. You have to know yourself. You have to build that psychology. And there's 1,000 different ways to do it. And everybody's different. Everybody comes to the table with a different psychology. There are people who have extreme discipline. There are people who have a certain relationship with money. There are people who have different, there are people who have anxiety. There are people who are dealing with depression. There are people who are narcissists. There are people who are just, overconfident, cocky. There are people who have no confidence and they're coming into the market. All of those pre-existing things weigh into every trader's journey. And this is why I know I'm going on a really, really long rant. I'm losing people, obviously, but whatever. I don't care, because if this helps one person, that's all it's a matter. I really don't give a shit about views. It's good for me, and hopefully it helps somebody. So this is where that whole becoming a trader is just, there's a lot of pieces to it, and it's not as simple. And this is where a lot of people give up. And this is where a lot of people, they aren't willing to do the work. They don't understand the reality of it. They're expecting something that just isn't there. And they don't understand that even a perfect strategy has to be executed by the person, and the psychology plays into a lot of this. So all right, I digress. I know I went on to a lot. Hopefully that rant, you guys got something out of it, because look, this is just something I'm very passionate about. And I think there's a lot of things that, people don't always understand, and some people just don't say, because it's not flashy. Look, if I was sitting here trying to sell a trading course, or I was sitting here trying to sell product to you guys or anything, um, it's pretty bad for business for if I was to turn around and say, this is going to be extremely hard. This is going to take an insane amount of dedication. This is going to take a very long time to get good at, unless you're obsessed to the point where you're probably going to affect other areas of your life that are going to see your health and other things go down. Lose, have loved ones probably be like, I'm done with this person. Like, that's not very appealing to most people. So but it's the reality of it, right? Just think about it. If you were to turn around right now at some point in your life, and let's just say, if you're a doctor, this doesn't pertain to you, but let's just say you're a doctor. You said, you know what? I want to be a doctor. I want to be a surgeon. Think about how much dedication and time is going to have to go into that. Think about the schooling, think about the studying, think about the exams, think about the practicing and whatever, I don't know, but whatever else surgeons do to continue to practice. And you want to become a really great surgeon in less than, let's say, 10 years, what you'd have to do that most other people aren't going to do, right? It's no different with trading. No different with trading. But a lot of people forget that, because there's such a zero barrier to entry, right? I can't walk into an operating room and say, "Hey, let me get that scalpel. Let me give this a shot. Let me see if I could do this." It just doesn't happen. But anybody can basically, in the shorter than this video has been, pull their phone out, open up a trading account, dump money in, and start trading. So, all right. All right. We're getting long. What else is new? These have been very long because I've been going on a lot of rants lately, but let's close this out. I don't think I missed any stocks, right? All right, quick question. Do I try to buy any of the moving averages? I do try to buy any of the moving averages if they are showing a level that should be important, if they're being respected. They're not necessarily always like how the market's chopping around the 10, 20, and the 50. They don't have as much weight because of that. But with some of these names that are really truly holding and respecting a moving average, then I'm willing to use that as an area of entry. Again, given the context of what's going on with the stock. Okay. That's it. All right. That's all we got for this week. Do me a favor, because I'm curious. If you watch this full video and you're at this point, just comment on the bottom something, anything. Just comment something on the bottom to let me know that you watched this whole thing, because I'm very curious. Like, I see the views of my videos have been going up, but I'm curious how many people are actually watching these whole things. Um, and yeah, this would be a good way, because it just motivates me more when if I see some of the, if I see all of a sudden like 15 people out of the 100 and something that are watching these say like I watch the whole thing every week, or I watched all this week. It lets me know that I'm not wasting my breath sitting here and giving you guys these rants. And if nobody's watching it, well, I'm probably still going to do it anyway. So, or whatever. All right. That's all I got for this week. There you guys go. YouTube, X, link in the description for Discord, link in the description for Deepvue with a free trial code, a 12% off code, and you can use any code on my link. If you do watch these videos and you have found Deepvue through me, please do use my code. It gives me a little kickback. It's a little nice. It is the one way that this stuff does put a little extra money in my pocket, which is nice. So, um, yeah, that's all I got. As always, get your work done, do the studying, and be prepared for next week so you guys